Hey man, I'm Jusko from ProudMoney.com. Now that we know that Capital One officially intends to acquire Discover, what happens next? First off, will the deal go through? And second of all, what happens assuming that it does? On Monday, when the news first broke, it wasn't even official yet when I made the video, so I wanted to follow up with a second video and talk a little bit more about how the deal will probably go down, at least my prediction for it based on what we now know. So the first question would be, will U.S. regulators allow this to happen? Will they let Capital One buy Discover? I say that they will. Even though by all accounts, Capital One would become the largest credit card issuer if this goes through, it doesn't mean that they are the largest bank. So they issue credit cards and they offer other banking services, but they don't have a huge branch network. And when you look at their assets compared to other big banks that issue credit cards, Chase, Bank of America, Wells Fargo, Citi, even combined, they are smaller than these other banks. So if you had Chase trying to buy Bank of America or vice versa, yeah, you're going to have the U.S. regulators say, no, you guys are too big. You can't combine now and now be, 50% of the market or whatever. But in this case, even when you have two large issuers coming together, because they don't have quite the same sprawling banking network as some of these other ones, I can't see it being stopped. Now, when this news was first breaking on Monday, I said that if Capital One bought Discover, Capital One would sort of corner the market for people that are newer to credit or maybe have had some past credit problems, at least among the major credit card issuers, and I still believe that that is true. However, it doesn't really stop anyone else from getting into that market, so I don't see it as something that is anti-competitive. There's nothing stopping Chase, Citi, Wells Fargo, or anyone else from offering more cards to people maybe with lower credit scores or with thinner credit files. So there's really nothing wrong that Capital One is doing here. And then of course you could see if there is a hole in the market, other players come in to fill it. Synchrony Bank or Comenity Bank right now, who tend to be mostly retail credit card in their partnerships, they could offer more of the general market credit cards, and both of them do, but they could move even further into that space. And then you've got someone like Ally Bank maybe that could move further into there. And then there are other smaller banks that choose to sort of stay small, or have so far, people like FNBO, Truist, and others of that nature, that maybe they would change some of their offerings if they see there's a hole in the market. So I don't see Capital One being dinged for being sort of anti-competitive just because they tend to work in a certain space with a certain credit profile. So assuming that the deal goes through, what next? Well, first off, let's talk about the credit card lineups. As far as I'm concerned, Capital One takes all Discover's customers, and the only thing they keep from Discover's credit card lineup is the Discover It card, the current Discover It card. They probably rename it the Capital One Discover card, and it has essentially the same features it does now. It's no annual fee, 1% cash back on everything, and then the 5% rotating categories. I could see them keeping that. Everything else, somewhat redundant with what Capital One already offers. So if you have a different card from Discover, probably over time you would be switched into a Capital One card. Now, none of this is going to happen very quickly, so if you somehow have a worry about it, you certainly don't need to. What they're talking about right now with this acquisition is end of 2024 or early 2025 before it even happens. Probably be another year before Capital One really gets Discover completely integrated into their operations. So Discover's probably got another 2 years or so to essentially exist as it does right now. So this is nothing that you have to worry about in the short term. But over time, I think the Discover card offerings go away. Now, in some of the analysis that I've read since Monday, people have been saying that maybe what Capital One really wants here, even more so than Discover's current credit card holders, is the Discover processing network that competes with MasterCard and Visa and American Express's processing network. So Discover doesn't pay MasterCard or Visa to process their credit cards in the way that Capital One does. So by acquiring Discover, Capital One can move most of their cards onto the existing Discover network. Maybe they would change the name of that network just to avoid confusion. But anyway, they would sort of cut out the middleman with MasterCard or Visa. The only hitch in that plan is the fact that Discover's current processing network is not as robust outside of the United States. Discover cards just not accepted as much, even though Discover's worked to change this. So probably Capital One's venture cards would stick with Visa because they know it's going to be accepted outside of the US, and until they can beef up that current Discover network more, they'd probably stick with Visa. But over time, probably the plan would be to be processing all their credit cards themselves. And then another big piece to the acquisition of that processing network is that there is a Credit Card Competition Act that is proposed in the Senate right now that may or may not pass. But the point of it is to say that MasterCard or Visa control 80% of the processing market right now, and something needs to be done because they're using their market power to keep fees very high on merchants for every credit card transaction. And so what is being proposed is to say, if you are one of the major credit card issuers, you have to allow your merchants to have a choice of processing networks. They can't be locked into MasterCard or Visa. They have to have at least 2 networks that they can choose from, and one of them has to not be MasterCard or Visa, which means there's only so many other networks out there. So if you have the Discover network as an alternative, and maybe they're a little cheaper to process cards than MasterCard or Visa, well then all of a sudden an awful lot of transactions are going to start coming through that current Discover network that have not been going through it so far because MasterCard or Visa have forced those merchants to stay only with them, and the credit card issuers have as well because they've teamed up with MasterCard or Visa. So obviously Capital One and American Express as well with their processing network, they really stand to gain if that Credit Card Competition Act goes through. Now that processing stuff might seem kind of boring, but it actually could play a big role in credit card rewards going forward, but I don't want to go too far into the whole can of worms that Credit Card Competition Act opens up. Suffice to say that Capital One and Discover could benefit if that actually goes through, but they also could be hurt in another way, which I'll get into in another video. All right, let's talk about customer service. Many people in the comments on my video on Monday said, no, I don't want this to happen. I love Discover's customer service. They have US-based customer service. They do a much better job than Capital One. Would they keep that? And the answer is no, they would not keep that. You are going to lose that US-based customer service from Discover, at least as far as I'm concerned. I can't imagine that sticking around in a merger of the 2 companies. One of the things that happens when you acquire another company is you look for synergies in the operation, so then you don't have to duplicate 2 different things. So whatever Capital One's doing now, that's what they're going to stick with, and they're going to take all the accounts and bring them over into the system that they have now. So you can say goodbye to that customer service that you may know and love from Discover. And then obviously this is not so much relevant to you as a consumer, but there's going to be some job loss on the Discover side. But again, you probably have about 2 years here where people are going to have a window to start looking for something else if they don't think they're going to be kept on in the combined company. So bottom line, my prediction is that by 2026 or 2027, the Discover name will mostly be a memory. We may have a single credit card called the Capital One Discover to remind us of past times, but that is probably about it. Now, again, if this merger sort of creates a hole in the market because Capital One is so dominant in that sort of new to credit or near prime space as well, well then maybe some other credit card companies step up. Not so much the bigger banks, but maybe we see Synchrony or Ally in particular, I could see getting more into that market and really pushing further into sort of general market credit cards and targeting some of that. So it could create some new interesting things happening in the credit card market where maybe the dominance of the biggest players have kept down some of these other smaller banks for a long time. So that is it. Those are my predictions. Would love to hear yours in the comments section below. Otherwise, I thank you for watching. And as always, please go to proudmoney.com where we do credit card reviews. We talk personal finance, we talk deals, and all sorts of other fun stuff too. If you don't have a comment or you're not going to go to the website, what you might want to do next is watch that video.